Welcome to Broker Buzz. My name is Don Chiesa. I'm the West Coast Regional Manager, also over all of our non-QM. I recently transitioned away from my last company and came to Newrez. And I had 15 years in my last company. And I'm telling you, I couldn't be more happy. And the things that attracted me to Newrez was not only the people, I knew a handful of them, but the culture. And the culture was just re-verified when I came here and started chatting with my ops managers, my product managers, my underwriting, my funding. The huge shout out to anyone on my ops side, because whenever I had a need, and I was talking to some of the folks on my side, leaders at all level were willing to jump on the phone. Like they'll get on the phone with you do as well, whether it's closing or operations. Heck, even our AMC folks, which are third party vendors, we've aligned ourselves with the right people and they're willing to get on. So that was a huge deal when I came here, not only the culture, but just the products that we have available from USDA in addition to FHA and conventional. That's on the standard size, but the non-QM, right? We have self-employed bank statement loans, other alternative income docs. We have what we call smart vests, which is our ability to do DSCR loans if they don't qualify for something else. We have a smart edge program, which allows us to serve the jumbo community and other things with assets that are, I think, equal to none others. And we just go so deep on our condo business, being out west in California and knowing all the different condo business. So not only is there a nice breadth of product, but the people here has been tremendous. I would like to welcome my guest, Sosimo Avila, to the broadcast. So, Sosi, would love for you to give a little bit of an introduction on yourself as well.
Hey everyone. Really excited to be here. Broker Buzz is such a fun topic for me as far as what's going on in the industry, especially because, for me, if you guys don't know my history, I went from being a pastor to then working at a direct lender. And then from there, just went through a crazy journey of finding some more confidence in myself and some more opportunity by moving over to the broker side. And now I've been on the broker space for about 2 years, and I don't know if I could ever see myself going back, or I don't see circumstances at this point that would call me back. So yeah, I'm really excited. I'm one of the producers at West Capital Lending. I love being able to help a lot of families get into homes and financially plan through real estate in a responsible way, and be able to help make some impacts that change the lives of not just the families we serve, but their children's children. So it's a beautiful journey and a beautiful industry to be in.
Well, it's very noble, and that's one of the things we love to do here at Broker Buzz at Newrez is just maybe talk a little bit about the whys and the hows, especially serving our, all these clients that you're referring to. But why don't we step back and chat a little bit? Like, I'm coming out of 15 years with a company and made the jump to Newrez for a lot of reasons. I love the opportunities we have here and the products and the cultures. I know my wife for leaving the last company, I felt like they were taking more from me than they were giving me. So we all have to make those kind of life-changing moments. You shared some early in your conversation as well that were life-changing for you, that made you make the leap over to West Capital Lending. So tell me a little bit about that. What got you to leave the last company, I guess?
Yeah, what got me to leave are very different reasons that of what will actually keep me out in regards to going back to a traditional IMB. For those who don't know, right, independent mortgage bank. I was at a couple different companies, and first started off, I came into a marketing department at an IMB. It was called Prospect Mortgage, and we developed a really cool system to help loan officers get more business from realtors. And I was one of the liaisons that helped grow loan officers' businesses. And when I started seeing how easy it was to grow their business, and I started seeing the ability to create relationships that actually created referrals, which also created closed loans, I just thought to myself, why am I not doing this? So I got licensed and I jumped in and I became an independent loan officer right off the bat at Prospect Mortgage. Then from there, did some journey, ended up at Fairway, which was a fantastic company to be at. I love the leadership there, the competitiveness. It was super, super good. And then ended up going into a different type of P&L model where you got more of the lion's share of the profitability of a loan. And so we ended up moving into a company called Celebrity Home Loans, and I specifically was able to help lead one of the DBAs and help from a start position with Neo Home Loans, and it was fantastic. It was one of the best cultures I've ever been in my life. Everyone was so proactive and helpful. Leadership was amazing. And it came to a point where what I started trying to create more of a social media based lending platform, we just realized that it was no longer going to be a good fit. And so it was really sad to leave because these were people that were pretty much family. Like these people grew me up or raised me in the mortgage space. They helped me learn how to fine tune my consultations. They helped me fine tune my value proposition. It was just fantastic. And so we ended up having a, split ways because of different visions of focus we had, but we still had a very similar fundamental mission. So those people I still call friends now. And, I think, Simon Sinek says, don't look at having enemies in industries, but like, I think the word he used was worthy adversaries, people that you have a lot of respect for that you just love to compete against. Those are my friends at Neo Home Loans, and just fantastic. And their model's really, really great. But I left because, again, a social media focus. Now, when I entered into the broker space, I entered into a newness that I didn't even know was there, right? I was in probably what I've seen in the industry, one of the best P&L models out there. We participated in front end. We participated in secondary pickup. I mean, it was fantastic. And so coming into the broker space, I was like, man, I don't know how this is actually going to do, but I'm just going to give it a shot because I want to create something on my own. And as I've been growing in the broker space and building relationships and learning how to be able to have relationships with underwriting at our wholesale partners, have relationships with the leaders and all these components, it's been pretty mind blowing. I've been very, very blessed to know that we can do production at a high level with a way lower margin than we were able to do in the past and hit the profitability targets that we're trying to hit. So it's again, the reason I left are not the reasons I'm a fan of the broker space. The reasons I'm a fan of the broker space is because when you do it right, you can truly create something that's scalable, profitable, and allows you to have the right tools, or it allowed me to have the right tools I needed to serve the clients and the convictions I have.
It's interesting. There was a lot of things that I knew about the place, some of the people. And so I loved the culture. And then once I got here, right, there was the unknown. But then once I got here, everybody that I've interacted with has been kind of down to earth. They just want to help clients get into homes. We offer a pretty wide, and we'll go a little bit deeper than in a second, product breadth. And so some of the reasons why I came were only amplified once I got here. I feel like when you got there, it was probably something a little bit different. Like, tell me, like somebody was going to come to work for a West Cap or was thinking about leaving the banking side to get into the broker side because you said it was a great P&L model. Why leave a great P&L model, go to brokers?
Yeah. The reason somebody would want to leave is really going to be dependent upon the person's circumstances. Like if somebody is in a situation where they need more in-house underwriting, they haven't learned the ropes of how to be an independent loan officer. If they, there's some of those components to it where they're getting company perks in a way that they won't be able to have subsidized at a brokerage because brokerage are low margin institutions. If somebody is okay or needs those things, I'd say stay at a direct lender. Don't leave. Like if you're getting things that you're not going to get elsewhere, if you need more resources to support you, than another person needs who goes independent, those two things right off the bat, I would say might want to stay where you're at. People who are coming on going, I want to advise clients in the right way. I want to do things the right way. I want to hold a standard that needs to be held. And I want to serve the families in a manner that they deserve. But as I've jumped in, it's been crazy. Like being able to be unshackled from the one rate sheet type of pricing, being able to be unshackled from using only the broker products in the non-QM space because the IMB didn't have delegated relationships with those non-QM investors. Being able to have freedom outside of that is, for me, a very, very big contrast. So I've really enjoyed coming over and seeing that there's a lot of light on this side, that there's product flexibility that allows you to actually do commercial deals. If you've gone through that, you can actually help with real estate if your company has created opportunities for it. And then being able to have the flexibility of pricing to let the big players compete with one another. I don't have to worry about competing against Newrez or all these other pieces, because at the end of the day, I get to be a benefactor. I get a benefit from them competing against each other for the business that I'm bringing to the table because of the families who've decided to trust us.
So it's interesting that last word you threw out. Like I always said, we're not in the mortgage business, we're in the trust business. And a lot of the big box shops that you were talking about that you paid left, you were selling products and trying to find the right client that needed that product. Where
Yeah.
what I think I heard a little bit was now, especially with the way you're generating your business, a lot of it being purchased, you're just trying to find the right program for the client. You have access to all these things.
Yeah,
So
it's a really
it's
good
such
way
a
to put
beautiful
it.
thing.
Don, that was
So
really, really insightful. I feel I haven't even noticed that. I I think I did try to find the right client in that IMB space. So again, if you have the right client and the right resources for it, stick to what works.
one of the things, and I'll pivot a little bit, and we can chat a little bit about the current like market and what's happening out there. Because one of the other problems with some of the big broker, or not big broker, but big mortgage banking shops, is they had a lot of overhead, whether it's executives or marketing,
Mm.
where the broker model allows you to be a little bit more nimble and flexible, and you don't have all that margin built in. So that's one of the big wins going on in the broker space, especially for somebody like you that doesn't need to support all that overhead and marketing because you got some self-sourcing clients. I'm seeing a lot more challenges in the market, and so it's harder. Like I'm curious, as your client profile started to change, there's a lot of qualified buyers out there, and so just trying to say, are you trying to change your strategy at all because of where you see the market's going, or that doesn't really impact you based on how you source your business?
Yeah, I think my value of why people refer clients to us and why they trust us, it's really morphed throughout the years. I think at first I had referral partners here. Oh, you were a pastor. So their scripting to clients were, this guy has your best interests at heart. And then clients would come over to me halfway offended because they're like, why does the realtor not think that I know who has my best interests at heart? I just spent 40 minutes with some person, gave them all my personal information, but, fine, I'll just speak to who they think I need to speak with. So it's funny kind of feeling that. And then as my value proposition started shifting from care to conviction-based consultative approach, meaning that we actually service clients with advice that fits their circumstance and data to be able to support that advice. As that started shifting, I saw a lot of referral partners then shift the way they even referred us. It went from, this guy has your best interest at heart. And even when rates were low, they were like, oh yeah, just get a second opinion because of low rates. It went from those to knee-jerk, conventional wisdom type of referral scripts to, you got to speak to this guy. So totally get it. You have your person, but chat with them about how to get your offer accepted at a lower price, how to be able to plan out your portfolio, how to be able to all these things, right? And so to answer your question, because the magnet of the business has always been good advice, I mean, we have just been continuing to see the business come in. Last month in July was, I think, the biggest month of my entire career. We were able to fund over 12.4 million. Like, it's just crazy. We were able to do so much. And as I look back and I try to think about your question right now, we did specialize in first time home buyers. And at this point, we kind of have a little bit of everything. Like last month, I helped some first time home buyers. I helped a lot of self employed entrepreneurs, both with moving up houses and also investment properties. I helped a hard money deal. And then I also helped another scenario where they bought before they sold. As far as what I'm prepping for, I'm kind of prepping for what's happening with the economy. And so I'm just prepping for that, to be really frank. Like, I have seen true value, flexibility with products, really good partnerships create some of the best production we've seen in a long time, if not in my entire career. And I know with all these tools, it's just going to get even crazier and busier. So I'm just trying to prepare for that.
And I think that answers the question that we were chatting about a little bit is what I'm seeing is all the things that you just described. If I would have asked you what your book of business looked like 2 years ago, it wouldn't be all those products. So probably a little bit more generic looking. And
Yep.
so if you want to get ready for where the market's coming, I think you have to have a bunch of clients still doing business with you. And those clients may not look the same. And I know we've
Yep.
referenced something that was called non-QM or non-qualified mortgages previously. You can go deeper on the name here in a bit, but
Yeah.
um, I think there's a lot of underserved clients out there that are good clients that now have more opportunities with some of the products out there. And so I guess maybe give me a little bit of feedback on that as well. Like how much of your business now is like a non-qualified mortgage or something that's not standard agency government business? And then are maybe we can move into a little bit like what kind of products are you seeing more of? And is it allowing you to increase your business? I know a lot of these loans sometimes cater to the self-employed, high net worth individuals. Some of these clients need a different product.
The thing that is the thing I'll share first and foremost are some of the myths that held me back, 2 years ago. I think when I first started seeing non-QM products come into the world 2 years ago, bank statement loans, all those pieces, it was a hard sell, even though it was a right sell in many circumstances. Do not judge a book by the history of its previous cover. Right? Because I do think 2 years ago there was a different cover on that book, and a lot of people were just like, whatever. Um, Now, it's gone through a rebranding. It really has. This is the entrepreneur loan, right? Like even when I promoted to my CPA partners, my financial advisor partners, we're always talking about entrepreneur type of financing. These are the best financing for entrepreneur type of borrowers. And it's been amazing. So about 50% of my business right now is this non-QM space, specifically for entrepreneurs. And it's been really, really neat. Like, for example, once you learn the ease of the product and once you learn the mentality of the product, you will find an opportunity to service a whole new book that you just haven't seen before. One of the things I would share is entrepreneur loans. They are there. And once you learn them, you can market them that way. But once you learn them, you can also use them to solve issues that arise with non entrepreneurs. You could use them to solve issues with different pieces that are more common sense. Like this individual who came to me, he's a high VP at a really big company, and he was just like, I just don't get it. Like, why would this big bank's guidelines be so different than this? Like, this thing that is an issue is not even a big issue. It's very common sense. I can see exactly how it works. Like, I don't understand. It's about the end product, which is how do we compact it into other mortgages and have a greater rate of return, is effectively how I explained it to him. I said, non-QM space, they're in a way different type of box. Like the way that these work in the secondary, they don't have to fit all these vanilla pieces. They can sell to the investors on the back end and create MBSs in a much more flexible way and still give a high return to their investors. So there's more common sense flexibility. And when he heard that, he just goes, okay, like now I understand how I can trust you on this when it just doesn't make sense to me. Now I see the bigger picture. And as I've been kind of explaining it to clients and understanding that this is truly, what is being done is there's an opportunity to serve the overlooked. Like I wouldn't even say it's underserved market. I would say it's overlooked market. The entrepreneur who can perform on their mortgage, but they just can't fit within the federal regulations that came in with good intention, right? And all the ability to pay acts and all the different pieces that happened. Those are really great pieces, but it kind of overlooked the entrepreneur who can absolutely perform, but needs some more common sense flexibility to the way that their file is perceived.
Like I think there's clients out there when we say underserved. Don't get me wrong. I think there's smaller loans and larger loans within this space. But as you're saying, there are clients out there that have recently moved around and have a wealth of assets that you wouldn't go through traditional financing. Or I started up a new business and I'm a year and a half into the business or 2 years and it's really cash flowing well. But if I'm taking a 2 year history versus a 1 year history, it doesn't work in your traditional agency financing. And so I just
Yep.
think there's an opportunity to pick up some of these larger clients. And I assume that also plays well in your realtor space. Like, has it helped you recruit more realtors, or you're not really growing your realtor space? I'm not sure the answer to that question. So I thought I'd throw it back over to you to tell me, like, is it helping you pull in better realtors or more realtors?
You know, I have not been really intentional to grow the realtor space anymore. I've been more so on the financial advisor and CPA side and just also leveraging the book of business.
I'm just curious, like, not realtors, but financial, like, and CPAs. I think that's a very much a space that people have talked about. But then when I talk to a lot of people, nobody's really going as deep as you on it.
Hmm. Yeah, and one of the big reasons have been because I know the non-QM space so well, and I've been able to break down for them the differences, right? Like as we build out the partnerships with FAs and CPAs, one of the things that we talk about is what, first of all, I should back up. We learn how to speak their language, right? So financial advisors, they get trained off of case studies. So if you don't have case studies, it's going to be really hard to teach a financial advisor what you're trying to teach them from a product, service, or strategy standpoint. And so, first and foremost, that's one of the nuggets I would just share with anybody here who's trying to build financial advisor business. Market yourself with cases so that they can see in real life, right? Specifically, back to the non-QM space, this is where I've been able to break down cases for them as well. I'm like, Billy Entrepreneur over here, he is, making $750,000 in gross sales. All his expenses and deductions are showing that he's making less than 150. He wants to buy this $2 million house. Here's how much income he has. Here's what monthly mortgage payment he's allowed to have. Here's a mortgage payment of a $2 million house. Doesn't work. Now his only options are going to be to call you to see if he can get more funds out of his retirement plan to be able to buy down the loan to a place that he can potentially qualify for, right? That's what happens a lot of times with this. Or he misses out on the house that he really wanted and he has to do a mix of both, lower price and more down, where everyone loses. The client loses because they don't get what they want, and the financial advisor loses because the plan that they put together to actually benefit Billy's future is now at potential risk because so much had to be liquidated and now it's just frozen in an asset that's going to appreciate at the same value no matter how much down payment they put in it. So being able to do that case in comparison to the case of, well, let's look at what they qualify for from a bank statement standpoint. The $750,000 gross sales, where are they being deposited? Let's average that over 12 months. Let's look at a default 15% expense ratio. Now, if we need to have a lower expense ratio, let's talk to the CPA and see what expense ratio they can actually confirm is on the business so that we can now see what income is needed. And then or see what income we have. And then once we see what income we have, here's what it looks like at your DTI. Here's what you qualify for. Now we don't have to liquidate as much. Now we can securitize asset for this borrower without having to go and liquidate capital that should be growing in another asset. So that type of case study and those type of conversations open up this new world of speaking for you, your referral partners, and most of all for how your leads are going to be referred over to you. If you show yourself to be a consultant who knows what they're talking about, go sit with them and just do a review. Right. So, yeah, it's been really neat to kind of take that approach.
Sounds like Just Miss product, and it does a lot of things like Just Miss Jumbo, whether it's got some small delinquencies that want to go to the standard program. We do a lot of non-warrantable condos or condo tells under it. But there's this one
Yeah.
product that are called Asset Qualifier,
Well,
where
it
we're
looks
just,
so good.
as long as they got over a $500,000 in assets, we take their total monthly debt, multiply it by 60, and as long as they had that much assets or more left over when they close the transaction, they qualify. But because you're dividing by or you're multiplying by 60 their debt, but we're not forcing you to pull out any of those assets. I think that's what I heard. They're worried about you pulling all their assets out of the investments they have. You want to have them keep them in these investments because that makes not only your financial advisor happier, but even your client happier, right? He's keeping in the current market where he can get a decent return. He's making his money work for them and then, getting the mortgage that he still wanted without having to liquidate.
Yeah. Yeah, absolutely. The reality to think about what the referral partner needs is what allows you to enter into the business as an actual value add, right? Like most realtors, if you're working with like Zillow Flex realtors, They need pre-approvals within 2 hours or negative 2 hours ago. If you want to enter into that partnership, have fun, right? Other referral partners who are self-source based in regards to their sphere of influence, they're looking for people that will make their clients get off the fence of, should I sell or not? Should I buy or not? They're looking for people who can actually sit down and show numbers in a way that's going to be more than a verbal explanation. Because when you see visuals, when you see true facts supporting the emotional desire, right? Like everyone's trying to justify what they want. When they can actually see that in a way that's going to be beneficial for them and does right by the client, all of a sudden you're a value proposition to their business that they can't find elsewhere. So to dovetail that right into financial advisors and CPAs, think about what they need. To Don's point, financial advisors, they spend all this time, brain energy, calculating numbers, crunching pieces to identify what do we need to do now so you can be here later. And then with one, emotional decision and loan officer who doesn't care, the whole plan could be unraveled. Like it just goes out the door. And so being able to help them know that they have a resource that's not just going to close a loan for them, but is going to be reinforcing a plan that they've put a lot of effort into and one that's going to be best for the client. And so, especially now with, all the new things that have come with the new bills that have been put into place, bonus depreciation as well is something that I think when we look at 2026, think about bonus depreciation, right? Think about the pool of savings investors are going to be able to have. W-2, doctors who have created real estate portfolios. Think about what high W-2 earners are going to be able to do, and self-employed borrowers are going to be able to do with bonus depreciation now here. Think about that and realize that when you work with the CPA who's trying to now teach their clients, you got to go buy real estate, you now have the same incentive that they do. You can enter into a new book of business again that you might not have had access to before.
So one of the things, and that's the other thing that opens up the non-QM space, is it's makes sense underwriting, as we keep saying over and over again. And so if you look at some securitizations out there, there's about a 30% exception ratio. Now you can't get that exception though without like a compensating factor. And so you're constantly trying to structure the deal. So one of the things on somebody we had on a prior webinar, his biggest question that he asked at the end is, can you share with me all of your assets? So he found it very important because not only does it allow you to set up that compensating factor, but it also, just as you said, maybe they're telling you they want a DSCR loan, but they qualify for bank statements. And if you didn't get that asset question, is that asset question important to you? And are there other questions people should be thinking about when they're talking to clients or the CPA financial advisor?
Yeah, a lot of the people that we speak with on the entrepreneur side, are very type D. So, like especially if it's a married couple, right? That they're in business together. One is super soft, really sweet. The other's just like right. And typically you have to speak to the right guy right off the bat. So yeah, some of those questions are really helpful. And the one that I usually ask right off the bat too, when I feel that type of energy coming towards me, I go, hey, I just want to know what's your tolerance for inconvenience and convenience, and what does it relate to in regards to interest rates? And sometimes when I phrase it that way, the person goes, what do you mean? I'm like, okay, what is a low rate worth to you? If I got to ask you for more documentation and I have to annoy you because the underwriter is going to bug me for stuff and I'm going to fight them, and then I'm going to bring you a list that's going to be shortened, but it's still going to be too long for you, even though I've already shortened it, is that type of work and kind of putting up with worth a lower rate for you? Or do you not want any of that inconvenience and you don't care, just close my loan and give me whatever rate is there? And it always allows me to reset the energy, and they go, I want the lower rate. And now it's a fun time to be able to go, okay, cool. Now I'm going to bug the heck out of you. And you can't bicker about it. Like we've already reset.
3 inches of tax returns that you need to give me for that.
Yep. I put it in perspective. Like I have one of my investors who I've done 7 loans for now. And, it was funny because even though I've done 7 loans for them, they came to me as well. And they were like, hey, this other person we met, they're a client of ours. They gave us this DSCR loan. Their rate looks lower than yours. And I'm like, sweet. What's the prepaid penalty on it? 3 years. Got it. Let me show you why that doesn't make sense. And And then we're able to even find another investor where it ended up being, the same rate with prepaid penalty, without prepaid penalty. And it was just really cool. So all that to say, when we went through it, he even bugged me. I should say bug me, but he's been a close friend now, so he would laugh if he heard that. But he even, wrote me about 4 days in as he's getting me all his documents again for some of the updated ones we needed on the bank statement loan. And he goes, I thought you said this would be less work than tax returns. What if I just gave you my tax returns? Could we do a lower interest rate if we did the tax return loan? I'm like, well, let's talk about, were they filed? Have they been amended at all? Were there any changes? Blah, blah, blah. And then, yep, feel free to send me your tax returns. I'll go through all of them. Every single corporation, blah, blah, blah. He goes, wait, I got to send you every corporation I have. I'm like, yes, any corporation over 25%, I need to have all the business returns for that corporation, blah, blah. 2 days later, when I'm talking to him, I'm like, hey, did you want to try that? He goes, no, you reminded me why I just need to do this. I was like, okay, cool. So, I will share, if you are new to the space and that kind of energy throws you off because you're just not used to it and you already feel insecure because you don't know the guidelines well enough, use that scripting to reset. Remind them why you're doing all this and take control back of the conversation to go from inferior to equal. And hopefully, as you learn your stuff more, go to actual good consultant.
When you start telling them it's not just your personal tax returns, it's the business tax returns.
Yeah.
They start you, well, that particular one business is on an extension but it's a great reason and we're making tons of money over there.
Yep.
Josie. Why can't we just do the deal? I can show you it, in a P&L, I can show you it to you in a bank statement. Great. Okay. So let's talk about those programs. And maybe it's a case study, Sosimo, like how are you marketing or is there marketing that you're doing with these agents out there that you're calling on? And is there, you alluded to do a case study earlier, like how are you marketing to these clients if you are?
Yeah, the non-QM space has opened me up to a world of marketing for agents that I stayed away from. Like 4 years ago, I was able to make friends with really great, high. I live in Orange County, California, and so we're at a very high price point. We had some friends visiting from South Korea actually last week, and so we took them out onto the water. We're going around, and they're like, "How much do you think these houses are worth? Like $2 million?" These are waterfront properties. These are 6, 12, $20 million properties. So, uh, it was a very interesting reminder of how expensive Orange County is. But 4 years ago, I would, because of social settings, different things, I'd make friends with these real estate agents who sold the 4, 6, 10, $12 million properties. And it was one of those where I was like, I love that we're friends. And they're like, could I send you business? I'm like, if you have somebody rejected by the bank because they're, self-employed, send that to me. Other than that, don't even send it. And as I've learned non-QM products better, and I've seen the non-QM space get more and more competitive in its pricing. The realtors that I have grown this last year, 90% of them, which again, I think it's been 2 or 3, so 2 out of the 3, because one's out in the middle of the country, those have been high net worth luxury real estate agents. Non-QM pricing, with being so sharp, with being able to be strategic, has allowed me to enter into the marketing, into the luxury space in a way that I didn't before. And so at this point, one of my favorite realtors is a top realtor in the Newport area. And it's been fantastic because she sends me clients that, the funny part is, like, one of the clients that we closed last month, it was an $8 million beachfront home. The loan was like 1.2. So I was like, dang it. But it was really neat to be able to service that world with the competitiveness of what we have, because most of these borrowers, if you're borrowing money for these homes, even though many just pay cash, many of them are needing non-traditional style of lending options. They're not looking for the big banks anymore. They're looking for who knows how to do tax returns, who knows how to be able to do things outside of tax returns, who knows this space that can give me advice and make it easy, concise, and not bug the heck out of me. Those are really the things that I'm seeing the most. So it's allowed me to market into a space really neat. The other part that I've marketed into a lot that's helped me grow my business a lot this year for the realtors I do have is, again, being able to emphasize on what the market's needing. But a lot of them are entrepreneurs. So it's been really neat for the realtor partners for us to focus on being listing lenders alongside of our listing realtors, and show different options for their properties to move and their sellers to be able to sell and buy.
One of the things, and we've even chatted about this recently, was seeing a lot of people trying to move inventory, whether it's builders or realtors, just because of the rate environment. Even if I can afford the higher rate, I don't want to
Yeah.
pay the high rate. So buy downs, give me your feedback a little bit on buy downs and how many investors on the non-QM space. I know at Newrez we allow for a temporary buy down to occur on a lot of our non-QM. Are you seeing a lot?
So good.
Is there still a huge need for that? Is that a win for us, maybe?
Yeah, Newrez is one of the only investors I've been seeing with that. So I'm really, really excited and honestly just honored to call you guys partners because of the products that you put together and most of all the people that you have that help us give those products to the families that trust us. So it's just been an amazing piece, and I'm very excited to just continue to see the success grow with one another. But yeah, temporary buy downs is a huge piece, right? Like clients are still knee-jerk reaction trying to do cash investor strategies instead of finance investor strategies. And so, especially with our non-QM investors, it's a really good way to bring them in, showing them for their primary residences, you have something unique. So then you're their investor person. And then the thing we dovetail that into is on the investor strategy. So, yeah, buy downs and leveraging credit has been a huge perk for us.
Is there anything else that you would like to share with the folks out there that you think is important in this space?
Yeah, I think the biggest thing I would say is if you've come into the broker space and you weren't really prepared to be as independent, take a moment and call your account executive and just ask them for some guidance, especially the people at Newrez. Like, just give them a call, ask them what you're missing. And I think a lot of times coming into the broker space, you can be overwhelmed like a kid in a candy shop with too many options. Remember, success as a broker means not just having a lot of tools, but knowing how to use your tools. So before you just go wide and try to use every investor in the world, find the partners that you know you have a really good human connection with. Find the partners that you need, call it three, five, whatever type of business you're doing and whatever amount of investors you need to be able to really create that relationship. Just call them, build the relationships, and go deep with few instead of just, over energetically going for everybody and spreading yourself in a way that doesn't allow you to actually care for the clients with the attention, with the intentionality, and with the service they deserve. Because it's all about them first. And so that would be my advice for anybody who's new to the space. And even if you're not new, but you've kind of gotten overly excited already, it's not too late to just retract, recalculate, and just be focused in how you service your clientele.
I think it's spot on. Some of the things I've taken away from our conversation is one, whether you're staying at a big box shop or going to be a broker or whether it's a client, every situation is unique and ask a lot of questions so you can get yourself in the best place.
Yeah.
You at West Academy, at Newrez, they'll be personal decisions, whether it comes down to your clients. And then I also believe we're in the trust business, and you referenced that a couple of times earlier, the word trust. Find ways, whether it's through case studies, chat with your AEs as well. Like that's another big thing. Like that'll help you with the trust factor because we're not in the mortgage business. If you can't get your client to trust you and they believe in you, it's going to be a lot harder to walk them through and get them to listen to the things that you're providing them without that trust. So leverage the AE and, you know, basically the same thing on my side is we want to do business with great LOs like yourself. So I reach out to you all the time as well and want to make sure I'm staying close to what's going on in the marketplace and we're delivering the right products for you. So as much as I want you to reach out to our AEs so they can educate you on what we do, we want to know what's going on in the marketplace so we can make sure that we're delivering the right products in the non-QM space to serve you and your clients. So
Just
if you want to stay, thank you, Sosi.
appreciate the partnership, Don. Thanks so much, man.
Yeah, pleasure.